Early 2025 has indicated Tesla's decline in Europe accelerated at a dizzying rate.
Now, Tesla boss Elon Musk has been busy shaking things up with his Department of Government Efficiency. Here in Europe, his car business was in the headlines this week. Well, figures released this week show Tesla car sales in Europe were down 45% in January compared to the same month last year.
And there's one car maker in particular that has given Tesla a run for its money: Warren Buffett-backed BYD.
Data from January 2025 indicated that Tesla's sales fell by an alarming 45% compared to the same month in 2024. Contrary to Tesla's downward spiral, BYD has been on a relentless upward trajectory in Europe. In February 2025, BYD reported sales of over 322,846 electric vehicles, a figure that represented a staggering 164% surge year over year. Despite an overall market growth of 37% in Europe, Tesla's inability to capture and convert the increased interest into tangible sales left it with a dramatically shrinking market share, reportedly hovering around a mere 1% in certain key markets. This downturn can be attributed to several interlinked factors. One major issue was Tesla's aging product lineup. While Tesla had once been lauded for its innovative and futuristic designs, the rapid pace of technological advancement in the EV sector meant that consumers were now seeking more than just a badge. They craved features like improved battery efficiency, advanced driver assistance systems, and the kind of localized customization that newer entrants were offering. Furthermore, Tesla's previous market share in Europe, once buoyed by early mover advantage and enthusiastic brand loyalty, was now giving way under the weight of evolving consumer preferences. Where Tesla had once dominated with an aura of revolutionary disruption, it was now seen as lagging behind, a perception exacerbated by stiff competition from local and international players who were more in tune with European tastes. Historically, Tesla's European journey was marked by an almost meteoric rise in the early 2010s. The brand was a byword for innovation, capturing the imagination of consumers and investors alike. However, as time progressed, the market dynamics shifted. Europe's regulatory environment, consumer expectations, and the availability of alternative models evolved, leaving Tesla scrambling to catch up. Historical sales figures reveal a pattern of slow stagnation turning into rapid decline. Whereas Tesla once enjoyed consistent double-digit growth rates in the region, recent quarters have been marred by falling orders and a notable shift in consumer sentiment. In essence, while Tesla's global brand remained formidable, its European branch was not immune to the twin challenges of market saturation and the relentless pace of innovation set by its competitors. Moreover, the challenges were compounded by external factors, ranging from economic headwinds and supply chain disruptions to strategic missteps in localizing production. The cumulative effect of these factors has been a steady erosion of Tesla's market share, leaving the company with a diminished presence in a region that was once a cornerstone of its international expansion strategy. The year 2024 proved to be a watershed moment for the global EV industry. Across the world, automakers collectively moved millions of units on the road as consumers embraced cleaner, greener alternatives to internal combustion engines. For context, BYD alone recorded sales of approximately 4.27 million vehicles in 2024, marking a 41% surge over the previous year. These impressive numbers underscored BYD's rapid ascent and global reach, even as traditional market leaders like Tesla began to face stiff competition in key regions such as Europe. In contrast, while Tesla continued to lead in many global markets, its European performance painted a bleaker picture. Tesla's share in Europe, once a robust 4 to 5% of the region's total EV sales, had eroded considerably. In January 2025 alone, Tesla's sales in Europe tumbled by 45% compared to the same month in 2024, even as the overall European EV market grew by 37%. This dissonance highlighted the stark divergence between Tesla's dwindling market appeal in Europe and the burgeoning appetite for EVs among European consumers. At the dawn of 2024, Tesla's brand was synonymous with cutting-edge technology and futuristic mobility. Yet, even with a strong global presence, Tesla's positioning in Europe was increasingly challenged by a rapidly evolving competitive landscape. European consumers began to notice that while Tesla's product lineup had enjoyed a pioneering advantage a decade earlier, its models now appeared less innovative when stacked against new entrants offering superior features, competitive pricing, and a keen understanding of local market needs. BYD, for its part, was emerging as the antithesis of Tesla's stagnation. Capitalizing on its domestic success in China, BYD had swiftly pivoted to the European market with a strategy that emphasized localized production, affordability, and an aggressive model rollout. With an already sizable presence in the global EV market, BYD was quickly capturing the attention of European buyers eager for variety and reliability, factors that Tesla, despite its star appeal, was struggling to consistently deliver. Contrary to Tesla's downward spiral, BYD has been on a relentless upward trajectory in Europe. In February 2025, BYD reported sales of over 322,846 electric vehicles, a figure that represented a staggering 164% surge year over year. Such explosive growth is emblematic of BYD's broader strategy of aggressive market penetration and localized production that has been yielding results both domestically and internationally. By strategically entering the European market, BYD has not only capitalized on its cost advantages and operational efficiencies, but has also been quick to adapt to regional market trends. With a current European market share significantly higher than Tesla's, BYD's share in some markets reaching 2.3%, the company is well positioned to continue its expansion and challenge entrenched players. A key element in BYD's winning formula has been its response to regulatory challenges in Europe. As the European Union ramps up tariffs on imported Chinese EVs, measures designed to protect local industries and counteract state subsidies, BYD has turned this challenge into an opportunity. Plans are already afoot for BYD to establish a third manufacturing plant in Europe. With existing facilities in Hungary and Turkey, this new plant would further cement BYD's commitment to the region, enabling it to sidestep tariff-related cost increases and better align its products with local market demands. This proactive move is not just a defensive strategy but a calculated offensive aimed at capturing a larger slice of the European EV market. By localizing production, BYD not only reduces costs and improves supply chain resilience, but also builds goodwill among European consumers and regulators alike. A stark contrast to the challenges Tesla now faces with its centralized production model. Consumer sentiment in Europe has increasingly tilted in favor of brands that offer not only technological innovation, but also affordability and reliability. BYD's product portfolio, which emphasizes efficiency, smart technology integration, and competitive pricing, has resonated with European buyers who are increasingly discerning about what they want from their EVs. Moreover, BYD's ability to tailor its offerings to suit local market conditions, from vehicle design to after-sales services, has given it a distinct competitive edge. The BYD story is one of evolution and adaptation. Whereas Tesla was once the undisputed champion of the EV narrative, BYD's emergence as a viable, and indeed superior alternative, is a testament to the dynamic nature of global markets. By leveraging cutting-edge technology and an astute understanding of regional consumer behavior, BYD is not only rising in Europe, but also setting new benchmarks for what an EV manufacturer can achieve in the modern era. To understand the current dynamics, it's instructive to look back at the early days of Tesla's European expansion. When Tesla first introduced its electric vehicles to European markets, the company enjoyed a significant first-mover advantage. Early adopters were captivated by Tesla's promise of a sustainable future and its innovative technology. The brand's sleek designs, impressive range, and the cachet of owning a Tesla vehicle contributed to strong sales growth and solidified its position as a leader in the emerging EV segment. During those formative years, Tesla's market share in Europe climbed steadily. Enthusiasm for the brand was evident in major urban centers, from London and Paris to Berlin and Madrid, where Tesla showrooms became a common sight. However, as the EV landscape matured and competition increased, so too did consumer expectations. Historical sales data reveals that Tesla's growth rates began to taper off as new competitors, many with strong local roots, entered the market with more tailored offerings and aggressive pricing strategies. When contrasting historical figures, the divergence in trajectories becomes starkly apparent. In the early 2000s and 20s, Tesla was not only the trendsetter, but also the de facto standard against which all other EVs were measured. Fast forward to 2024, and while Tesla continued to enjoy a loyal following, its market share began to show signs of strain. Meanwhile, BYD, buoyed by record-breaking sales figures and an agile business model, a year-over-year comparison for early 2025 provides a telling illustration. As Tesla's sales in Europe nosedived by nearly half, BYD's numbers soared, an explosive 164% increase that reflected both pent-up demand and strategic market repositioning. The contrast is not merely quantitative, it speaks to a qualitative shift in consumer preferences. Where Tesla's models are now viewed by some as relics of a bygone era of innovation, BYD's offerings represent the future. Modern, affordable, and finely attuned to the demands of today's eco-conscious consumers. This comparative analysis underscores a critical lesson for the EV industry. Innovation is not a one-time event, but an ongoing process. Companies that fail to continually adapt and evolve risk being outpaced by more nimble competitors. As we step into early 2025, the European EV market is a study in contrasts. On one side, there's Tesla, a once iconic brand that now finds itself grappling with plummeting sales, eroded market share, and a series of strategic missteps. On the other side stands BYD, whose rapid expansion and innovative approach are turning it into one of Europe's most formidable players in the EV arena. Several key trends have emerged in these early months of 2025. Consumer behavior shifts. European buyers are increasingly prioritizing value for money, technological innovation, and localized support over brand prestige alone. In this environment, Tesla's premium pricing and perceived detachment from regional needs have started to work against it. The European Union's recent moves to impose higher tariffs on imported EVs, particularly those originating from China, have forced companies to rethink their production strategies. Tesla, with its centralized production and reliance on non-European facilities, is finding it difficult to navigate these regulatory hurdles. Meanwhile, BYD's localized manufacturing approach not only circumvents these tariffs, but also fosters a perception of being an insider in the European market. The early 2025 data points, highlighting a 45% plunge in Tesla's sales against a booming overall market, suggest that while demand for EVs is robust, it is not enough to sustain brands that fail to innovate or connect with consumers on a local level. Several interrelated factors are contributing to Tesla's steep decline in Europe. While Tesla's models once set the benchmark for innovation, recent releases have failed to capture the imagination of a market that now expects frequent upgrades and more localized adaptations. Competitors like BYD are offering vehicles with advanced features, improved battery technology, and designs that cater to regional tastes. The charismatic and at times polarizing leadership of Elon Musk has increasingly become a double-edged sword. Tesla's association with high-profile political controversies has alienated a segment of European consumers who are sensitive to brand ethics and corporate responsibility. This erosion of brand trust has led to boycotts and a significant shift in consumer sentiment away from Tesla. Tesla's centralized manufacturing strategy, which was once an asset, now appears as a liability in the face of rising production costs and stringent regulatory tariffs. The inability to quickly adapt production processes to local conditions is hurting Tesla's competitiveness, especially when compared to BYD's nimble, localized approach. Perhaps most critically, the European market is now far more crowded. With established regional players like Volkswagen and Renault stepping up their EV game, along with aggressive new entrants from China, Tesla finds itself fighting an uphill battle for market share. BYD, with its robust growth figures and strategic investments in local manufacturing, is emerging as the clear leader in this new era. BYD's meteoric rise in the European EV scene can be attributed to a series of strategic decisions that have allowed the company to not only weather the challenges posed by stringent tariffs and fierce competition, but also to thrive amid them. Localized production as a competitive edge. One of BYD's most significant strategic moves has been its commitment to localizing production. With existing manufacturing hubs in Hungary and Turkey, and plans for a third plant in Europe, BYD is well positioned to minimize the impact of import tariffs and meet the specific needs of European consumers. This localized approach not only drives down costs, but also helps build strong relationships with local suppliers and regulators. For Tesla, the road ahead is fraught with challenges, but not without opportunities for redemption. The company must confront several hard truths. Tesla needs to reimagine its product lineup by integrating the latest technological innovations and adapting designs to suit local tastes. This could involve collaborations with European design houses or technology firms to ensure that its vehicles are not only cutting-edge, but also culturally resonant. The benefits of localized manufacturing cannot be overstated. In order to compete effectively in Europe, Tesla might need to establish or expand production facilities within the region. Such a move would help mitigate tariff burdens, reduce supply chain vulnerabilities, and enhance the company's image as a committed local player. Addressing the reputational damage that has accumulated over recent years is critical. Tesla must engage in sincere dialogue with consumers and regulators, demonstrating a renewed commitment to ethical practices, transparency, and innovation. Rebuilding trust will be a gradual process, but it is essential if the brand hopes to regain its lost foothold. While BYD's recent success is cause for celebration, sustaining this momentum requires ongoing vigilance and innovation. As consumer preferences evolve, continuous research and development will be vital. BYD must ensure that its vehicles not only keep pace with technological advances, but also anticipate future trends in mobility, connectivity, and sustainability. BYD's strategy of localized production has proven effective, but further collaboration with local suppliers, technology firms, and regulatory bodies could solidify its market position. Such partnerships would enhance operational efficiency and foster goodwill within the local communities it serves. Building a strong customer support network is key to sustaining long-term growth. BYD should invest in comprehensive after-sales services, ensuring that buyers have access to maintenance, software updates, and customer support that meet or exceed local expectations. The unfolding drama between Tesla and BYD in Europe is a microcosm of larger strategic imperatives shaping the EV market. The European EV market in 2024 and early 2025 tells a story of dramatic transformation. Tesla, once the gold standard in electric mobility, finds itself ensnared by a perfect storm of outdated product offerings, strategic missteps, and a rapidly evolving competitive landscape. In stark contrast, BYD has leveraged its agility, strategic foresight, and commitment to localized production to not only survive, but thrive in a challenging market environment. From record-breaking global sales in 2024 to the staggering 45% decline in Tesla's European performance in early 2025, the numbers speak for themselves. They tell the story of an industry in flux, a battleground where the old guard is being unseated by new players who understand that innovation is not a one-time achievement, but a continual process of reinvention. For Tesla, the decline in Europe is a wake-up call, a clarion call to reinvigorate its approach, recapture consumer trust, and realign its strategies with the dynamic realities of today's markets. For BYD, the rising star in the European EV narrative, the challenge will be to sustain its rapid growth and cement its position as a global leader, not just in terms of volume, but also in innovation and customer satisfaction. In the end, the race in the EV market is far from over. As companies like Tesla and BYD battle for supremacy, the real winners will be the consumers, who benefit from the relentless drive toward better, more sustainable mobility solutions. The future is electric, and as the European market continues to evolve, it will be the brands that adapt and innovate that will lead the charge into a greener, more connected world.